StoneCo is a financial services company down in Brazil. They enable merchants to accept credit cards and other digital payment formats. So they're a high growth company. They've been growing very quickly. What's also nice about StoneCo is they generate free cash. That's why they caught my attention. They also caught the attention of Warren Buffett, who has invested in StoneCo. I'll be taking a look at StoneCo, evaluating the company and determining what I think the company is worth, taking StoneCo through my process and making the decision to buy, hold, or sell. My name is Victor. I'm a value investor. I like analyzing companies and sharing that analysis on YouTube. If you could do me a big favor and like my video and subscribe to my channel, I'd really appreciate that. Now let's take a look at StoneCo. I have developed a process that I like to follow when I look at a company and I consider buying, holding, or selling that company's stock. It involves 4 questions followed by a decision. The first question is, do I really like the company? Do I think it's an attractive business model? Do I like the industry? Does the industry have a lot of value? Is the company operating and performing well? And really, that's a grade on the management team. Is debt under control and less than 3 times EBITDA? And I want to discount the stock. That way I can get a good value play out of an investment in a particular company. Based on the answers to those questions, I buy, hold, or sell the stock of this company. The story on StoneCo is easy to understand, frankly, because here in the United States, we've had PayPal, Block, and other companies that have provided a similar service and operate a similar business model. The difference being that StoneCo operates down in Brazil. Brazil is a very large country with many people, many merchants. So I like the company. I like financial technology companies. And I also like that it's down in Brazil. It gives me international exposure to my portfolio. This is the one and only company that I'm looking at down in Brazil. And the industry itself, I like the industry. I think there's a lot going on in moving payments to a digital format, and that includes credit card, but it also includes other types of digital formats like cryptocurrencies, like other forms of digital currencies, direct to your checking account transactions, similar to like what Venmo is doing here in the United States. That's also an opportunity for StoneCo down in Brazil. So I like the company and I like the industry. StoneCo announced their earnings, and the earnings were good. They're growing their revenues by 28%. Very good growth, especially in a year where growth is not as great as it was maybe in 2021. It's really good to see that the growth is 28% on the top line. They also are growing their EBITDA and their net income. So it's very good to see that from the company. As we look at their outlook, they're looking to grow their revenues above this amount, and this is in Brazilian currencies. I'm not going to quote the Brazilian currency because I convert everything to US. But what I want to mention is that they expect to continue to grow, and based on their best estimates for the next quarter, they're going to grow at 22.6% revenue. If you compare Q3 of 2023 to Q3 of 2022, very good growth. Overall, over the long haul, over the last 4 years, the company's really grown a lot. Collectively, 344%. If you look at 2018, their revenue was 408 million, but now they're nearing $2 billion in revenue. So great growth from the company. Looking at their most current quarter for their income statement, very good growth at 28.2%, and they have a profit in the quarter. So high growth company with profit, very good combination. The balance sheet looks great. The company actually has more cash and short-term investments than they do overall debt. So really they have net zero debt because they can pay off all their debts immediately. And they have actually been increasing their cash and short-term investments balance. So the balance sheet's in really strong shape. The statement of cash flows looks good. The cash flows have been increasing. If you look at the first half of 2023 and you deduct the investments in capital expense, you have a 21.6% increase in free cash flow if you compare the first half of 2023 to the first half of 2022. I believe StoneCo is currently priced at a discount of 65%. I believe that each share is really worth about $20.36, but the market will sell you shares currently at $12.32. How do I get to this number of 65% discount? Well, I value the company using two methods. First is the valuing free cash flows that they're going to produce in the future method. And second is looking at earnings per share and establishing a value based on earnings per share. Looking at free cash flows first, I'm taking the run rate that they're currently on for free cash flows using 2022 and growing them at the rate that they have been growing. It establishes a starting point of $345 million. And I'm going to grow those cash flows in years 2, 3, and 4 by 20%. After that, I'm going to grow them at 5%, more realistic amount. All those cash flows for years through 4 are here. And then the terminal value, meaning all free cash flows beyond year 4, amount to $7.8 billion. I'm going to discount those cash flows by a very high weighted average cost capital of 13%. It's an international company. It's a small business, so a much higher weighted average cost of capital. I get an intrinsic value of those free cash flows of $5.5 billion. They have $1.5 billion of cash on the balance sheet and $569 million of debt. So when I add the cash and deduct the debt, I get an equity value of the company of $6.5 billion. But their market cap's only $4 billion. So it offers up a nice 45% discount if you compare the value of free cash flows compared to where the company is currently pricing the stock. The market's saying, hey, I'll sell you shares for $12.32. But if we discount the free cash flows that the company is expected to produce, it actually should be priced at $17.81. So that's one method. Looking at earnings per share, I'm taking the most current earnings per share calculations for this year, which is 73 cents per share. A PE of 40, which is realistic. This high growth company, fintech, it could be higher, like 60, but we're going to go with 40. And I'm going to use an expected growth rate of 5%. And based on those factors in this calculation here, if you'd like to try it at home, I get a value per share of $25.46. The market is currently pricing the stock at $12.32. So it actually offers up an attractive 107% discount. I blend the two and I take more weight into free cash flow method. I take 2 parts free cash flow method, 1 part earnings per share value method. And I get to that 65% discount on the stock for StoneCo. So let me revisit my process with StoneCo. First, do I like the company? Do I like the industry? Yes, I do. I think the company is very well operated, growing at more than 20% in top line revenue, operating at a profit with generation of high free cash flows. I think the management team's doing a great job. They have a net zero debt if you look at cash versus debt, so very well below 3x EBITDA. And there's an attractive discount on the stock. Therefore, I'm going to continue buying shares of StoneCo. While I'm at it, I encourage you to find your process. This is my process. This is what I like to follow. It didn't happen overnight. It's really been a method that I've developed over many years. And you develop your method. Listen to a variety of investors and find where you have your experiences, your talent, your interests, and establish a good process. That process should be something you use consistently over the long haul. That way you can learn from your investing activities. Whether you make money, you can learn from that. Whether you lose money on a stock, you can learn from that. And I encourage you to establish your process of investing in stocks. StoneCo has a high institutional ownership level. If you look at institutional owners as well as mutual fund owners, it eclipses 82%, which is very high. That's typical of a big cap, company. This is typical of, like, let's say an Apple or a Microsoft. So it's good to see that, because I think that StoneCo has attracted the investment of Warren Buffett. I mean, you can't get any better than that, but it's attracting a lot of institutional investors in this particular company. Looking at the stock and where the stock price has been over the last year, you can see that there's been a lot of up and down process in the stock. And it's really afforded or made available really good, attractive prices on the stock. For example, not too long ago, earlier this year, you could have bought the stock at $9 a share. It's up at $12 a share. The stock is up 30%. And that's after you saw that big drop in August of stocks. I mean, it's dropped and given up a lot of its gains, but it's still up 30%, which is really good to see. My value on the stock is way up here at $20 per share. So I believe that there's very good value available in StoneCo. And I'm going to use down days when the stock is trading lower to buy into StoneCo and continue to build this position in this high growth company. So that's my evaluation of StoneCo. I think it's an interesting company, high growth company, generating free cash flows and profits. I'm going to continue to buy into this company and hold the company long term, unless something drastic happens to the downside. If they start making errors in their business and maybe not operating as well as they should be. Thank you for watching the video. I appreciate it very much. Do me a big favor and like my video. Throw in a comment and let me know what you think of StoneCo. And subscribe to my channel. You can see more videos like this if you subscribe. With that, let me wish you the best of success in investing in 2023.